Hi guys, I'm Sandy Ingram. Welcome to the Edu Matrix channel. In this video, the channel will explain Iraq's status on joining the Forex market and being traded like any other global currency. Now you can find supporting documentation for this video on the channel's blog. A link is in the description. Iraq's joining the Forex market for regular trading is one of the best solutions for Iraqi Dinar investors to be able to cash in our Iraqi Dinar banknotes and trade, receiving the currency of their choice in profits. At least that is how we hope things will go.
The Iraqi Dinar, or IQD, will only show up broadly on major retail Forex platforms when Iraq's banking system looks normal to the rest of the world. That means one transparent exchange rate, clean anti-money-laundering controls, banks that can move money easily with foreign partners, and enough buyers and sellers so trades can happen smoothly. The IMF doesn't flip a switch to list a currency, it watches, advises, and grades the policies. Iraq has been fixing pieces of this puzzle, but honestly, there are still boxes to tick. Here's a list of tasks Iraq has completed. 1. Shut down cash dollar leakage and tightened oversight like the ban on cash US dollar withdrawals from January 1, 2024, and bans on some banks' dollar activity. 2. Ended the old dollar auction model and moved trade finance to normal bank channels with audits, which is helping shrink the official and parallel rate gap. 3. Launched digital payments reforms and stricter rules for e-payment firms to meet anti-money laundering and counter-financing of terrorism standards. 4. Worked with the IMF on banking reforms, including state bank restructuring, private bank modernization, better liquidity tools, and stronger supervision. And 5. Began tightening money supply in 2025 to support price stability, another sign of policy discipline.
Now, here's what still needs to happen before the IQD can be represented on the Forex market like other currencies.
1. Keep the official and street rates aligned and liquid so pricing is transparent and spreads are tight. The IMF says progress is real, but more is needed. 2. Finish cleaning up anti-money laundering and counter-financing of terrorism gaps, and keep widening correspondent banking links so settlements are routine and low risk. 3. Continue bank reforms so the system is well capitalized, well governed, and digitally connected. Another task, which is optional but helpful, is to consider formally accepting IMF Article 8 obligations to signal, in legal terms, that current account payments remain free and non-discriminatory.
As you can see, Iraq has done a lot more than what is left to be done. Now let's look at the explanation for these tasks.
Iraq needs one reliable exchange rate and a liquid market. In the past, Iraq had a big gap between the official rate and the street, or parallel rate because dollars leaked into the black market. Over the years 2024 to 2025, the Central Bank of Iraq shifted trade payments off its old dollar auction and over to normal bank-to-bank channels, also known as correspondent banking. Since January 2025, legitimate international payments are handled by commercial banks through their foreign correspondents, with the Central Bank of Iraq supplying them weekly and auditing for compliance. The International Monetary Fund says this move helped narrow the gap with the parallel market, exactly what you need before most brokers will touch a currency. Iraq must show strong anti-money laundering controls so global banks will do business with Iraqi banks. In 2023 to 2024, the authorities and the United States tightened oversight of dollar flows, even banning cash dollar withdrawals from January 1, 2024, and blocking some banks from dollar transactions to curb smuggling and fraud. That's painful in the short run, but it's really essential to gain trust abroad. In 2025, the International Monetary Fund noted Iraq adopted a 5-year anti-money laundering and counter-financing of terrorism action plan following a MENA-FATF evaluation, and it kept pushing the Central Bank of Iraq to strengthen risk-based supervision. These steps are the kind of plumbing that makes foreign brokers and banks comfortable listing and trading the Iraqi dinar. Iraqi banks need wide correspondent banking links. For a currency to trade widely, local banks must be able to settle payments through big international banks, not just in United States dollars, but in other currencies too. The International Monetary Fund praised Iraq's transition to trade finance handled by commercial banks through those correspondent links and urged Iraq to keep expanding them, another prerequisite for easy foreign exchange trading. The private banking system has to be modern and trustworthy. The IMF keeps pressing Iraq to restructure its big state-owned banks, strengthen private banks, set up things like a stronger deposit insurance scheme and a credit bureau, and improve bank governance and digital infrastructure. This is less headline-grabbing, but it's what convinces the outside world that transactions in Iraqi dinar are safe, quick, and predictable. Digital payments and fewer cash dollars help. Iraq rolled out Digital Payment Regulation No. 2 of 2024 to reduce cash usage and raise financial transparency, and in May 2025, the Central Bank of Iraq issued tighter rules for electronic payment providers focused on anti-money laundering and countering the financing of terrorism. The more Iraq moves on to traceable electronic rails, the easier it is for global partners to say yes to the Iraqi dinar. Policy signals matter, but, there's no IMF approval stamp to list the Iraqi dinar. The IMF's role is really about surveillance and advice, not flipping currencies on or off the Forex market. That said, markets look for signals like stable macro policy, a single exchange rate under a clear regime. Right now, Iraq operates a conventional peg, and of course, the legal commitment to keep current account payments free. In 2025, the IMF noted that Iraq continues to utilize the transitional Article 14 status instead of formally accepting Article 8 obligations. It also indicated that Iraq does not maintain current account restrictions or multiple currency practices. Now, formal Article 8 acceptance isn't a hard legal requirement to be traded, but it's a strong green flag to markets and brokers. So the bottom line is, there isn't a single button you can press to list the Iraqi dinar on Forex. It's really about proving, through policies and, the underlying financial plumbing, that the system is clean, the rate is stable and unified, banks can settle cross-border payments easily, and there's enough liquidity. Iraq is moving in that direction, ending dollar auctions, tightening anti-money laundering controls, expanding correspondent banking, and digitizing payments. The IMF has publicly recognized these steps. When those improvements really stick, more global counterparties and, eventually, retail platforms will be comfortable offering the Iraqi dinar.